is beta and how is it important in making an investment decision? Hello, I'm Rachel Jones and you're watching kalkinemedia. Beta is a measurement of stock market risk or volatility, which shows how a stock price moves up or down relative to the overall market. While beta of more than 1 shows that the stock price is more volatile, beta of less than 1 indicates that the share price is less volatile than the overall market. Beta of 1 means that the stock price is in line with the overall market. So to put that into simple words, beta provides a hint about how much a stock is risky for investors against the overall market. The statistical measure is employed by investors and traders to compare a stock market's risk to other stocks. Beta is calculated using regression analysis. For instance, a firm has a beta of 2. That implies that the stock of the company is double as volatile as the overall market. Now, in such a case, the stock price may surge by around 40%. That's if the market is expected to rise by 20%. Similarly, the company may see a loss of 12% if the overall market falls by, you guessed it, 6%. So there are different levels of beta. Negative beta is when a stock with beta less than 0 means it has an inverse relation to the market. Generally, this is considered unlikely. There's also 0 beta. No matter where the market moves, the value of cash doesn't change. Beta between 0 and 1 is seen in companies that are less volatile than the overall market. Beta of 1 is when the stock moves in the same direction as the market or the index. Beta of more than 1 are stocks with volatility greater than the market or index. The level of risk associated with a specific stock helps investors to take buying decisions based on their own risk appetite. So risk-prone investors generally avoid high beta stocks and are happy to park their hard-earned money into utility stocks and treasury bills. Several brokerage firms publish beta measurements for different stocks in their reports on a regular basis. And investors should keep in mind that beta is a historical measure of the volatility of a stock. While beta can indicate the pattern so far, it can't predict what's expected in the future. Now, if you like this information, please like, share and comment on this video and subscribe to our YouTube channel. Press the bell icon for notifications for our latest videos, and for more information log on to our website kalkinemedia.com. I'm Rachel, signing off for kalkinemedia.